we will have these sessions. Nice. So, guys, what it is, I want to start off with tonight. So, what we're doing is I want to go over basic market structure. Just to start from the very beginning once again, right? And I'm doing it for the sake of my partner that we set in here. Just to get more fundamentals, right? So when it says here fundamentals in terms of basics, when it's so even though I know everybody here have experience and everybody know our canvases look like and thing, I just want to go over it once more. It may have something that you may still pick up, right? Um, Now when you build a skyscraper or you want to build up, you want to build an empire, you have to dig down first, right? Your foundation have to be good. So if your foundation not good, then you will build on a weak, structure and eventually it would crumble, right? So if you do understand properly how to draw zones and draw trend lines and things, then that would hamper everything else you learn going forward, right? So before I start though, right, and get into it, what I want all it is tell me is what are the make of what I have on the chart currently. Just look at it and tell me what are the make of it, or what you could see happening, or what you think happening. Right now, everybody just tell me what they think happening here, what they're seeing. Don't be shy. Anybody?
Well, what I see is that the market was in an uptrend and it break the downtrend and then it started to climb back up and just consolidated in that area there.
Mm-hmm. Everybody
Right?
agree? Everybody agree with that?
What does it say? It break the trend line and is in what?
Like it coming down to the end of the last few candles there, like it just consolidated in that area there, in that range.
Okay.
What we talking about here? Eh?
Yeah.
It did not go back up to the previous higher highs. It just consolidated right there and that's where we are right now.
There we said you see it on the chat.
Um, well, it created support zones, the consolidated support zones where for these zones there, when it is the virtually double pullbacks. Well, larger ones, I would say minor ones and major ones. Uh, and as I said, it really did break the trend line and started to consolidate where the X is there.
Yeah.
Uh, the market also did return to the highest again. Yeah,
All right. Yeah, me. Don't
yeah.
feel like I leaving you out, bro. So we have a new member in here, my partner from way back that doing the trading and thing, and we end up connecting after all these years. He doing the trading for a little while, and so I guess he come in the group just to get a little sharpen up now. So he's a man who like to talk plenty, but you know now, boy, for the sake of interaction, bro, we see on the charts, buddy.
From looking at it by model,
Mm-hmm.
um, I want to say overall it forming some kind of pattern,
Mm-hmm.
like a bullish flag, but I'm not really too sure.
Okay. Yeah, nah, not that one. Um, kind of way if it was here, kind of way, but because of the consolidation, if this was facing down, it would have been a bullish flag. So this would have had to be more like this for that. But this part of it is a bullish flag, but it had to be going more down like that in our channel. But the fact identifier a zone is great, to be quite honest. Right? Maybe on a high time frame, it could say that. Like if you want to put it like this, I guess it could consider it as such. Alright, I guess. Alright. So everybody correct. Alright, everybody correct. So let me start from baby steps. Alright. Now last in baby steps is not necessarily that, right? So we all know um But so everybody just be cool with the black candles, right? Anybody need it to be the red and green, or everybody understand how it would be with all being black. Are they good? Are they cool with this?
Nah, this is cool. This is cool. Bro.
All right, nice. So
Yeah, that's good.
right. So this is a pro tip though. I recommend that you change the colors of your candles. Now psychologically, the red candles does do something to you, right? And this is proven. You can Google this. So I would recommend that you change the color of the candles. It would, I promise you, it would become easier to trade. It would remove some of the anxiety that we just have with trading. Right, just
Yeah,
watching a red candle and
right.
all
That's really same thing.
yeah, right. So I
One
recommend
one
Mhm.
one quick question, Malo.
Mhm.
What do you think about high Kanashi candles?
Right. So I used to use them with binary. I like them, they are good, but I would use them after entering the trade to confirm that they continue going in the direction we want. Right. But to enter, I would recommend these candles because they have more information on them. Like the wicks and stuff.
All right,
Yeah. But once you
all right.
enter, you could it's no sin to switch across. They would actually help you more. I could actually try to practice using it. I use it on binary, but I never use it for forex. Right? Cool. So we don't have to explain everything about a candle, right? We know how it is be. But what's important about these candlesticks is where they form. Right? So we all know what doji is, we all know wherever is, no problem. But where on the chart they form is the most important. That is why I want to go for the market structure. Right? So obviously we know wicks mean rejection. If it rejected from the bottom, that means the market do not want to go there. And if it rejected from the top, that means the market don't want to go there. Right? So we understand how the wicks work and what it represents essentially. We go always have wicks anyway in the chart. Right? But what we're concerned about is the basis of where you're looking to take your trade from, which is support and resistance. Support and resistance, also trend lines, is key levels in the market. They are good prices. So remember that. Right? So when somebody say a key level or a support and resistance zone, they are good prices. Right? So in trading, you want to essentially buy low, right? Because you want the price to go up, or you want to sell high because you want the price. You want to sell for a really good price now, right? So everything is these numbers on the side here. When on any chart you're looking at them, is money, is the price of something. So the price is what we're concerned about, right? So the strategy we're going over it again that we just use. So I don't really use indicators, so I would recommend not to base all the trading strategy on indicators. Use it as the last confluence, meaning the last thing you look at to confirm what you're already thinking about, right? So ignore the 200, ignore the moving average in the beginning, right? All I'm going to tell you, the RSI, sorry, I'm going to tell you how I use them, but use them last, right? I don't know if that makes sense. So in the strategy, right? So I'll look at the right down. I want to give a checklist. So I'll make the checklist. But if I still want me personal notes, I can write it down. The first thing that we just do when we come on the chat. So this is step by step the strategy and how we take trades or how we look at trades, right? Now, the strategy is essentially a break and retest strategy. So what we're looking for is for the market to break out of consolidation, and then we look for an entry point after that happens. The reason why we're looking for it to break out of consolidation is because it does take a lot of volume. So we know how candles just work, right? So the bigger the candle, the more money somebody put on the candle to be able to move it in that direction. None of us here, maybe the whole trend and combine, but we can move a candlestick. Right? Money does move candlesticks. Plenty volume. Somebody or some bank with money buy or sell. Candlestick move. When that happens and it break out of a zone, that is an institution did that. We as the little guppies on the side, we trying to identify when those guys buying something. Because if the man with the money buying gold, you want to buy gold too, them know what's going on. We don't. Right? So we want to identify when they do things. And that is one of the confluences or one of the things to look at to identify when somebody with money, a bank, a hedge fund, somebody buy or sell something. Right? That's essentially what we're looking for. So in consolidation, the price will neither up nor down. Nobody don't have enough money to do anything. When somebody with money enter a trade, it just break through the zone. That is your indicator to start to pay attention, right? That means they either selling from a good price or they buying from a good price. Right? Everybody cool with what I say there? Make sense?
Yeah.
All right, wonderful.
Yeah.
So we starting the trading strategy on the daily time frame. This is for any pair, crypto, commodities, currencies, it don't matter. When you come on trading view, you click in the daily time frame. The daily time frame is to establish the dominant trend and where true support and resistance lies. The meaning as the reason I say true is that you would see where the price we traded intraday. Right, so we trade in between that day. So somebody trades, we could hold it for the day, a couple hours. It only have 24 hours in each one of these candles, right? So it go how they play out in a particular way. So ideally, we trade in one candle every day. We trade one candle if there is a candle to be traded, and if we get lucky, we might get more than one. Right, the trend might run. Now the dominant trend is where the market will be going to. So it going towards liquidity. So liquidity, right? In the simplest terms, liquidity is, well, we know it as support and resistance, right? But what liquidity really is where money is resting, right? So it have it have stop loss here, right? And it have stop loss here. That is liquidity, where people stop loss is, right? When the market thing and pull back, it are men who identify the zone, and that people would have entered buys here. A lot of people, right, would have entered the trade here, and the stop loss could be somewhere here. That is the obvious trade. That where everybody traded. Yeah. So this is a trade here that everybody looking at. A lot of people would have entered who catch it. Real stop loss below here right now. Right? Same thing with the top. It's a man who see the market come up and they see the market take a little dip. There's a good price. It's a man who sell the market here. It's a man who open go sell. Right? Continue going down. So it's a stop loss here. That is liquidity, where people's stop losses is. Now the reason why us as retail traders just get tired, most times we correct enough, right? But we enter in. You see, we could clearly identify the market here. If any one of us enter a trade here and probably stop loss down here, we make money. It's that easy. But because we don't have money to put no stop loss quite down here, because I sure if we put a stop loss somewhere down here and we enter that trade, we you're going and see 3,000, 4,000, 5,000 for your stop loss. Sometimes I see $50 like too much because we don't have enough money now. So we enter in on small time frames. But the small time frames in between all of this here, so we guarantee to get chopped now. Right? Now the market has always go towards liquidity. It going towards stop loss. It going towards where all the money is. So it's like the price is like a magnet to that. So if you think about it like that, you always know where the market would head now. Now the market would head towards the place with the most liquidity first, right? And then head in direction. So once we identify the dominant trend, right, it going towards the dominant trend is buys. The market going and pull and touch the stop loss. It's going and buying. We know the market buying, ultimately going up, right? But they go eat man food down here first to create more volume to go up the road. You see me put that buying low, is you see me put that sell high. Nah, man with money buy gold here and they go and sell gold here. Or some of them go hold it and then they go read something high again and go say, it's a good price, bro. Like let me say a psychological level is 3,000, let me just say, men go just sell off gold. Pow. Eat our food, wherever it reach, then they will come back and they will buy it again. So the same people buying and selling. Right? Buying and selling. So that's essentially what the market is. So it going towards liquidity, right? So what we're trying to do is identify those areas, right? Which is also support and resistance, which is also supply and demand. Supply is the top, demand is below, right? Wonderful. So that is how the market is moved, and that's what the market looking for. Think about it like as they would have a mind of its own, right? Nice. Now, to identify these zones properly, and notice what I use as zones. We just use the zones, the word zone, but we don't really think about what we mean by zones. Now we just hear everybody else saying zones, so we say zones too. But it's really a range, right? Especially with forex, it's a range that we just be trading, right? Not necessarily a line. So most people when they join the stuff, they just put the line, right? That is wrong. What we using, so after we go on the daily, what we going to identify is the dominant trend. Although we can clearly see the market going up, let me just identify it still. The reason when we pull in it regardless is so that we could also identify future points of interest, right? So we noticing that the market, well, this would have been the wrong thing because this trend line would have actually been wrong. Yeah, this was supposed to be our pull here because it did break this area here. Right? Now you're not really supposed to move your trend line, yeah? But I'm going to redraw it now because the market shocked a shift now. Right? So this is kind of where it's supposed to be, but I'm no longer going to use this here. Right? So we're going to pull it to where it is now, currently. So this is the trend here now. Right? Dominantly. So we get multiple touches. A trend line is only valid if we get 2 or more touches. So we get touches down here. So each touch is our thing, eh? So you see how that 3 candles, that 3 touches technically, right? But come up here, 4, 5 touches essentially, right? So we identify the dominant trend of the market. So we know the market going up for sure. When we pull the trend line, we have a potential place of interest, right? The place of interest is a good price. When the market come out down here, this is technically a good price and a good price. Once the market hold this trend line, we keep on looking for buys. So we know the market going up overall, right? I don't expect since last year or the 2022 one thing for the price to come quite back down here, right? That not impossible, but implausible. So once we identify the overall direction of the trend, so this is on the daily, we stay on the daily, right? On the daily time frame, we identify the overall direction or trend of the market. What we then want to look at is the highest and lowest point that the market reach. Right? That is supply and demand, that is support and resistance. So before we go into any other time frame, we stick into the daily time frame. That is where we currently trading, right? As you get more advanced, I would show you how to identify zones on the like the weekly and monthly and stuff and thing, right? But that's be more to buy and hold coins. So the next tool we would use is the rectangle or the box. What we're going to do is draw a line from the highest wick to the highest body. Right? Highest wick to highest body. And then same thing, lowest wick to lowest body, right? This is what we're going to identify as our trading range, right? So we have the overall dominant trend, right? The overall dominant trend, we know the market buying, no problem. And we intraday for where we trading, we could see the highest and lowest points that the market reach on the daily. So this is the first setup that we're using, right? This is how we marking up the zones to identify where we're going to look for trades from, the point of interest, right? So this is our range here. So usually I wouldn't fight up too much with taking trades inside of here. Now there would be little moves we could get from here to there, no problem, we could take it. But the ultimate goal or range is for when the market break out of one of these zones. That is where the money is. So for a man to break one of these zones, where money going, you want to be on that side of the trade now, right? So we're looking at major zones. So although we enter in the trade on the 15, we could even enter on the 1 minute, right? I would show you how to. But the zone that we're looking at is within the daily. A lot of people don't ever reach to the daily. We just be intimidated by higher time frames. But that is what you need to be able to properly identify your zones. The other reason for using higher time frames is because I show all of we trading already and we get one big green candle or one big red candle out of nowhere and you don't know where that come from. You see the market will manipulate you. No. The market hit that trend line and you never see it. The market hit support or resistance on a high time frame, you never see it. Right? Because you're trading too small now. Right? Or like why we're using the prop firm to be able to leverage properly. So after the daily, where we establish we overall trend and the trading range, so the range is this zone here. We could then come down to the 4 hour and identify or sharpen up the zones, right? So clearly now we could see, well, all right, we the market range in here, right? The ranging inside of this zone here. So ultimately, what we're looking for is for the market to break out on top here or break out below here. So before I put any alerts, because I want to mess up the screen, but what I would do is put an alert on top and below, right? So this is to kind of ease your mind.
Hello,
Go ahead.
I have a question.
Mm-hmm.
You see, when you draw in the zones, it's from the highest weight to the lowest, to the highest body,
Mm-hmm.
and the lowest weight to the lowest body.
Mm-hmm.
Could you actually point that out for me? Because
Right. So we joined on the
what
daily, right?
exactly?
Right.
Uh-huh.
So I would do it over.
You don't need to do it away. Just need to take the mouse and point
All
it
right. Well,
out.
you'll see it here now. Right. So
All right.
we're looking at the top wick here, right? On top here, right there, right? So the top of the wick, so the top of the highest body, which is this area here. See this? Huh? So the top of the box is the top of this wick here, and well, it kind of on the body here, so somewhere around here. Anyway here, right? This is where the top going and be. So you're looking at the wick to the body, and for this one, the bottom here, this is the lowest wick, and this is the body of the lowest wick. So this here going and be the bottom range.
All right. Take it through. I want to switch time so
This
it
is
will look exactly like that, but it will actually get his own and lower frames, right?
yeah. So once you do this properly, if you come down to the forward, it's gonna line up perfectly. This will line up perfectly with all time frames once you draw this properly. Cause I can now switch onto the forward and it line up perfectly, right? So this here,
All right. Take it.
right? So what we could notice now is that ultimately we in consolidation still, right? Now it have moves in here, right? No feeding, no trading here, that trading here, you'll get something, right? But it may not be a long trade, it may not be a big move. And if it break these zones, then you're looking at a big move. That's how you get around on. Right? So you be more patient. As we seeing man sending well I next group day the a partner them Colin and I pay for them university because there's information. You know, let me see what the fellas doing on that side. And
Uh-huh.
and well, so I don't as a man, I like to stay in Malin and be humble, bro. But too. So the good, they get certain thing now, boy. But ultimately, you don't get big moves now. It's always be little thing. So they go party TP right here, you know. So you come now and this go be our trade right here now, here to here, right here to here, and then they tell you TP smash. You know, if all notice, most of the trades I call because if you're from the very first class that we was on, bro. Remember the first trade I called how much weeks ago was somewhere down here, you know, though. Right? And essentially we catch all this coming up. Now we didn't hold one trade, but it was a big move now because we identifying where the market going overall. So we get longer running trades now. My issue I still fighting with is holding trades long, right? Which I would improve at some point in time, right? It's an ongoing process. And me and we try again yet, and I ain't going to Dubai and I'm gonna thing yet now, boy. Right? That's still to come. So when we identify the zone, this is we trading range. So essentially inside of here is consolidation, right? The market the market not doing much. It's, if you notice it here, not doing much, right? So we still have to wait for it to come out here or come out here, right? No problem. So what we want to identify is a particular chart pattern that does indicate when the market going to do something or when the market is about to reverse, right? Now, I in particular, there's only buy the market. Right? If you look at my trades, I don't sell because ultimately the market going up, right? So it's easier to identify that the market is going up, right? Now, what we could also do to help it moves in trading is if it trending, but only if the market trending, you could pull a trend line on the 1 hour. So the 200 moving average this year, there's also act as support and resistance, right? So if the market trending like this, you could pull out a smaller trend line here, but only if the market already gaining where you want now. If it's not giving where you want, then you can't pull it, right? Right, you could take that, right? So only if the market trending. I don't necessarily I will more draw that after I enter a trade, right? As I confirm that the market is indeed going where I want it to go. So let me say enter somewhere down here. Let me say enter somewhere down here, and you want to make sure that you can still hold the trade. You pull the 1 hour, right? But as soon as it break, that is a day number. You're out of here, market shift. You come out the trade, right? But we ignore that for now. That's an additional thing to get into. I don't want to confuse or leave too much, I think, right? So what we're looking for, as I say, because we're in the trading range, we don't want to get chopped up in here, right? Because we see all of this what's going on. This is what happened here whole week, right? So we just chopping around in here. So we know we don't enter the trade when the market consolidating, right? So we're waiting for the market, but based on my trading strategy, it's for the market to break out of one of these zones. So we're waiting for the market to break out of the zone with a bullish engulfing, retest the zone, and then continue up. Here would be our entry point. So I'll give all the cleaner examples of that though. Right. This would be the entry here. Right, same thing for below. Looking for the market to come, break below, retest, sell off. This is the entry point here. Right. So how it is, we're going to identify that, or what it does look like. Right. So we will get into that. So after we mark up these zones, I will put alerts at these areas to identify when something happening and go about my business. So I'm not watching the chart until it happens. So I can trade in view. You come and you could add an alert here. I will put the alert as gold buys, and then I put one as gold sells. Right, and sit down on your hand. So you're looking for the market to break out of these zones, and then you enter. Right, until you get one of that move, you sit down on your hand. Whatever happening in here, irrelevant. Now you could do the same thing on a lower time frame, like the forward. We're not only one, so you could do the same thing here on the 1 hour, you know. And you could come now and you could draw the same support and resistance, and you could get a small trade, a little scalp, and make a little money and say no. However, the reason why it is, I don't like to take these little trades unless I really just thirsty to trade, is because the move so small in between here now, right? What you want is to have good ranges for the market to run to, right? So the TPs, let's be your next level. Okay, remember, you never know, right? You never know what the market would bring. You don't know how much volume the market really have. You're never sure. So really and truly, if it is, and this is what them fellas be doing, not fighting about talking about, just observations in trading styles, right? What they would do is they would take trades from right here to right here. Right? Now 10 to 20 pips is a take profit. They're not saying no. Right? They could make little money doing this here. But what would happen in this little range here is, by the time the market break out of here, and according to the volume this break with, right, you might not even get no pullback, so you might miss the trade now. You follow? So that is why we want to go with the major zone. So when the market break, like we see the market break above here, bro, and nothing here, you're gone. Right? Then the market break here. Chances of the market break here, it might look to come to the channel line to retest here. So you have, you have a nice range that they could work with now, boy. So that's why we're looking at bigger zones, right? So this could be a trade in here. Nobody can say no. If you want a little small thing, you could very well take it. Nothing wrong with that. But we're looking at the major zones to get accurate entries for the most part now, right? You know it have volume in there. So that is what we just be waiting on essentially, right? Major zones to be broken. So we had them zones there, and that we were looking for essentially, right? Nice. So how we just really enter the trade? So let me find the pattern and show you, right? So remember, we're looking for trades around key levels, right? So the key levels is support and resistance, supply and demand. We're looking for something to happen around these zones, right? Anything around these zones here is what we're looking for. So only when the market like reach the zones like these, then we pay attention now. And then when it reach these zones now, we're looking for a particular thing. So the thing now, I wanna, if it's a name, boy, I don't even know what it is called it, boy. I don't even know. Right? But I could clearly identify it. And this one looking kind of like it. So let me use it on the moving average, right? So let me assume the moving average is support, right? Now what we're looking at is the market. So overall we know the trend is, let's use this one here. So overall we know the trend going up, right? So we know we're looking for buys overall in the market, right? We know that we were looking for here. Now we gain little pullbacks. Now this is only 1 hour chart, right? So this is hours of pullbacks. And this could be a whole 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, right? Almost half the day the market sell for, right? Now we could see the market selling off here. Right? So we know we gain, we know the market going down, right? Nice. Now the market come and it push. We get a big red candle. The market pull back. We get a big red candle. The market pull back. We get a big red candle, right? But at the bottom of the trend, relatively close to our key level, what happened here? We get a bullish engulfing. A candle that formed bigger than the previous candle, at least two, right? So if you notice, although we get little pullbacks, we never get a candle to surpass the previous ones, right? It's always kind of small, right? Until we reach this candle here. When this candle forms, this is a bullish engulfing. This is one of your first indications to look for entry. So we will do more, right? So don't, if you ain't catching this one, it's fine. We will look at other examples, right? This here is the first indication that we're looking for. We look at a reversal. So a bullish engulfing candle is your first indication for a reversal trade. Plenty money went into this one candle to change the direction of it, right? So this candle bigger than these two candles. The next candle, which is not a very good indication, simply because only 1 hour, man, they come down. We're looking for the entry in 15 minutes. Like a perfect example here, boy. So the entry point is only 15 minutes, eh? So after we mark up this only 4 on the daily and we confirm it on the 4 hour, the next point that we're looking for is only 15 minutes. Right? So that's not a entirely up. But I mean by what we're looking for the trade within these ranges here. Because I feel like I entirely up there. Is we're looking for the pattern that I'm going to show you within one of these zones. Right? So we know up here or down here is where we're looking for the trade. Right? We essentially looking for an entry point around here. That we key levels. We would find that on the 15 minute. Right? So let me say here is where we're looking for the trade within the zone here. On the 15 minute is where we would find it. So that's the entry point. Right? Good. So this is how we would identify it. So we see the market come to the zone. Now you could sell all this, right? You could sell all of this. It's fine. Nobody can say you can't. The reason why I just ignore these cells within the overall trend is because it's easier to identify when the trend change. Follow? So although we selling off and we gain, a little momentum, some people want to buy and sell. I ultimately looking to buy. Now I know overall the market going up, right? So this here to me is considered a pullback. So I wouldn't fight this sell. I will allow that sell now, right? Now we come down to a key level here. So the market selling all this time. The market pushing down, pushing down, pushing down, right? It's not breaking the trend line. It pushing down, pushing down, pushing down. We reach inside of the zone here. Alright, let's stay with me here because this one is the most important if you pick up nothing else. The market's selling all the time and it reached into our key level. So the key level is where we're looking for a trade to happen. It could be happen, it could happen on top here, it could happen below here, it could happen anywhere, but it could not happen within this range now. Right? The lowest and highest point. Within the range, it gonna happen. This thing here that you're looking at in particular is what you are always going to be looking for. You know what it is called this. If anybody ever find out, tell me. But I just observed this from fighting up in here for a while. This is just something I repeatedly keep seeing. Right? So this is how you just use it or identify it. The market's selling all the time. Right? It reached a key level, a place of interest, a good price where you're looking for your trade. Right? The market selling and then you come and you get a big candle to pass the previous one, right? So this candle bigger than the rest of the candles that come down at a key level. So even if you see a bigger candle but it's not by a key level, you can ignore that, right? You're looking for a key level. So you're looking for this at either support or resistance on a high time frame. If you notice, while all of the market was selling, it keep making lower lows coming down the road. So this low here is lower than this low, and this low is lower than this low, and this low is lower than, like you said, this low, and so on and so forth, right? So we can easily identify the market selling, right? The market push, you get a pullback, it try to go higher, it can't, it push down again. A market pullback, they're trying to go higher, it can't, it push down again. So the market keep pushing down, right? Every time it pull back, it push lower than the previous low, right? At the key level, right? If all you do understand it, please ask me to explain. This is your whole trading strategy here. If you get this, this is what's going to change your career and start to make your money.
Question.
Yeah.
Right. This key level so
Mm-hmm.
is so that we need in
That's your what? I need that
right.
last part.
This key level,
Mm-hmm.
right? Key level that which is of importance
Mm-hmm.
is what we drew on the daily. That's
Correct.
what we refer to as a key level on 15 minutes.
Yeah, so remember at first you're marking up on the daily. So you're identifying where the key levels is. And then you're waiting patiently for the market to reach there. And from there, you're coming down to the 15. So let me say you have your alert triggered or whatever, right? And you get triggered in when terms like the market tell you, hey, where the price reach at the key level or whatever, right? So if you zoom back out to the daily, right? We zoom back out here. At first, right, when you now mark up his zone. Now I put the alert below here because I'm looking for this shit currently. But initially you could pay it like here. Right? So you could see where the market, when the market approaching the zone then. Following? Make sense?
Yeah, yeah, yeah.
Right? So it approaching the zone, so you could get set to pay attention. Only then you can come and sit down and stay on the chart. Right? But you ain't staying on the chart until you get an alert now, right? So We identify we so when we come on the chart, the first thing we go on is the daily. We join up on the daily, wherever, pull the trend, mark the zones, so we know where we're looking for the trade in particular. Right? When we get alert or something to tell you that the market approach in your zone, then we come on the 15 minutes to take the trade. Now you could sharpen up the trade on the 1 minute to get your a real sniper entry. That's not necessary to get it, right? The reason why you stay on the 15 is to confirm the move. Now if you come down on the 1 minute or the 5 minute too soon, you could get a false breakout and you could get chopped up, or you could hold drawdown unnecessary, right? So you wouldn't let the market pull back as far as it needs to go now, right? So you will tie up yourself essentially, right? So we know overall we're looking for buys in the market because the market is buying. So when the market is selling off like this, well, for me personally, or they might come on or they might get it, right? Or they might be real sharp at it, no problem at all. But initially, it is easier to identify when the market turn around as opposed to trying to figure out how far the market going. Remember, you're going with the dominant trend. The dominant trend is buying. So when the market's selling off in a buy market, it is a pullback. You do not know how long the market is going to sell off for, right? For example, right? And this is what it does chop real people. You see how they're selling off here, right? If we go up to the daily time frame, right? If we go back to the daily, right? That sell that we selling there is just a pullback, you know, dog. That little pullback you get here, and within this little gray range here, if you look at it, there's a wick. So if you end up on in this trade, right? Let me say you in zoom out, and you just decide, hey, yeah, well, we're going on, the market selling, and you on a 5 minutes our chart, and you think in the market going and sell, right? And you don't have your major zones, you end up in a wick, you know, dog. And that market pull back on you and eat your food, you never see it, right? So within the gray area here, if you end up late and you're feeling like you're winning and scalp and thing and catch and move and thing, you end up in a wick, boy. You get wick out the trade, right? You didn't even realize that was going on there, right? So try and get your overall structure, right? So the market selling in a buy market. I don't care. I'm waiting for when the market buying, because that's where the market going overall. You're not beating that overall trend. The market's buying for however long, not like the big trend line we pull, right? So I'm ignoring the sells. The sells, to me, is an indication. I'm waiting for men to get chopped up in this. At the key level, we notice we getting the market selling off. Correct. Nice. We identify that. When the market come down, you know, and we get the bullish engulfing, which is our first indicator to take the trade, what we are waiting for is the second pullback. So what you want is for the market to reach up to something called the neckline. So the neckline is where the market break from again. So like we say like here, so here will be the neckline of the trade. Alright? Don't worry, we could do another example. Don't want to the head. Right, so the market sell off, and then we come now and we get a push, right? The very next pullback is higher than the previous pullback. This little area here is higher than this little area here. This here is lower than this. So this is what we're looking at coming down the road. Lower lows. And if you want on YouTube, I mention, hey, lower lows, right? No problem. But when we reach down here, we start again higher lows. Ooh. Well. Right. What we're looking for is to identify when this going and change. So you see how the market shift from lower lows and now we getting higher highs. This thing here is the indicator to know when this is going to happen. And here is where we're looking to enter the market though. This is your indicator here. Right? And forget this RSI, forget this 200, forget every indicator, forget everything else. This is what you're looking for. So how are we using this? So we identify the market selling off all the time, no problem. We come and we get bullish engulfing. Alright, that's my first indicator to see what we're on. I am going to sit down and wait on the trade. So alright, the market come and we start to get higher highs. This is a good sign. We never get a higher high before it's selling off. No higher highs, everything lower. Right? The next pullback after we see this is a higher high. That's a good sign. But this is the neckline. The neckline is where the market break from now. Right? So if we could pull this all the way out here. Right? So this one might be a little bit tricky to identify, but I will go for it again as I said. And we're waiting for the market now to break this neckline. Now the market come up to it and it pull back. Now, when I say let me take an aggressive entry, the aggressive entry there's be something like in the middle here or down here. Right? I don't wait for it to break the trend line. The reason I say aggressive entry because I see the zone, I see the volume, I know the market go turn around. Let me see if we can get the best entry. So we might hold a little bit more drawdown, right? But we will get the trade first now, so you have a greater room to run. So when I say aggressive entry, this is what I just be taking. This is not the ideal position. This is not the ideal position. But because of how much times I do this, I go take a chance on it and enter the trade, right? But the trade that you're looking for, so you see how we have a trend line pull? Pow, right? This is only an hourly trend line we pull here. You see how it break the neckline at this zone in particular here? And we get this bullish engulfing. So I'm gonna move this. We'll move this. Alright, so we at the neckline and the market break with a bullish engulfing. The market pull back and hold the neckline. Right, it hold it, meaning that it didn't break and come. If it break anything, that's how it just get frightened and now you're bumming in the trade. Right, but your stop loss going to be quite down here. This is why the prop firm and risking properly is important. Because if I enter the trade here, I could have my stop loss below the next low down here. Right, minimum 2 to 1 we're looking at. Right, minimum 2 to 1. Nice. So the stop loss here. So once you enter the trade and the market don't break this, you're inside. So don't care what flop. Don't care if it come and it frighten you. Don't matter. Once it stay above, you bad. So even for this instance here, even if I come and I say, well, let me take a aggressive entry, right? And we enter quite up here. the stop loss below here. So once it do break, once the market do stop you out, you're good. So once you set your stop loss, once the market do take it, you good to go. So that way you don't move it now, because the market is designed to frighten you. It's designed to shake you out. That way you can sit down and watch them trade play out now. If you're watching every single candle, you will see things that not there now. That's like I think it was Friday when I called the trade and I closed the trade. I sit down watching them candles. I said, but the volume low, this and that, and you exit the trade and you trade win. Right? So you can't sit down and watch it. Cool. So once your stop loss set below the low, you just leave it alone. So that what I just do is set alerts now. So once I had the stop loss, I will set my alert like halfway through. Like we say somewhere here. And if I see like it coming down, then I go peep it because I'm like, I wonder what happening, but what you doing? But if you're looking at the market, might kill them off and go take the full loss. Right? But it has to be aware of what we're on, and then I will set an alert when it break my zone. And then it be going into profit, so I know, well, alright, bro, we can start a trail or do whatever. Right? So this is what we're looking for. You're looking for the market to form this pattern here in particular. Right? Form this pattern here in particular. And then break the neckline. When the market break the neckline with a bullish engulfing and then pull back in and hold, that is your entry point. So your entry point will be here. Anyway here. It don't matter. I have no perfect entry. Right? Now, if you identify the zone, like we say you have all this marker prior. So that is what I say. don't predict the market, because you can't, right? You don't know where it's going to go and when it's going to go, but you can anticipate the market, meaning that it might go this way based on all these things, with the anticipation of the market. Right, meaning that, well, alright, it might do so by so, you enter confidently. So you could then come to the 1 minute and find a real nice entry somewhere down here or wherever. But the reason why I'm using the 15 is to give it time to to pull back and whatever. Because like we say, the market is a neckline here. Like we say, and the market break it. You see how this next candle come and it break back below? You will wait now, because it break back in the structure. You follow? So you go wait, and then it might tell you get a doji. Right now, when they get the doji, now the market can reach back right here, you can enter again, and so you go. So that is that. Let me go. Let me do our next one, and then we will take some questions. Right? So let me find our next area of support or resistance, and then we can look to see if we go get the same trade, right? So remember, this is what we're looking for at key levels, right? So there you go. See if we find one again. And any random place. Alright, so we must get one somewhere down here, right? Right. So we say we get this little zone here, we're looking at this area here, we say. And then we're looking at this area here. Right. Alright, cool. So there we trade in range here. So we're looking for the move somewhere up here or somewhere down here. We're looking to find that somewhere on the 15 minutes. Right? Can't find it so far back, but alright, no problem. No problem. Okay, I get you. Oh my god. Alright, let me take this one here. Alright. So let me assume this is close to our key level, right? Let's assume so. So you're looking, it's the same thing happen, but we're looking for it at a key level. Now it wouldn't look the same every single time, right? But generally it would have the same lineup, right? So remember, once again, ultimately we're looking for the market to continue going up. So we're looking for buys. We end up in our pullback, so the market selling. So we can identify the market selling by lower lows, right? Market lower lows and lower highs. So do it loose whatever. Alright, cool. We could identify the market selling because we see we getting lows here. Alright, every week will be at a low. Market selling off. Alright, so we could identify the market selling off, right? Cool. Nice. So we see all of this. Now with all of this here, after you watch it, so remember we saying I'm gonna be hands there. It's a no rush. Patience is the key now, but right? We're looking for them perfect ideal setups now. We're looking for them pretty trades. Right? That's how for the most part when I send trades, there's play off now. So the market pushing, selling off, you get a pullback, push, pullback, push, pullback. Right? None of the previous candles was big enough to match the one before now. And all the buy candles in the downtrend small. Right? They gradually going up the small, but none of them have no volume now. Right? So we look at it as identified markers. So we seen it selling. Until, so remember, we're looking at the market to be at a key level, right? That we assume it is a key level that we at. We assume so. I know. Hey, look at that. Look at that. It's at a key level. Right? True talk, don't lie, boy. Look at that. So we have our support and resistance area here. Right? Nice. So the market selling, and then at a key level, so remember we're looking for this to happen at a key level. The market selling, and then we get this candle. This candle bigger than all the rest. Right? This is a bullish engulfing candle. You could get this as a sell too at a resistance zone. So that we say up here, and the market up here. Right? And you get this red candle, this bullish engulfing, or like how this one is here, bullish engulfing. This is what you're looking for. A big sting candle. You're going to know the candle when you see it. Right? What most people do is that they see this candle and they just enter the trade. No. So for 15 minutes, you're going to wait until this candle done. Wait until it closes. On the side, you just see the countdown. You wait until it closes. What you are then going to do is wait until it pull back and break the neckline. So this is your trade here. Right? So we have the neckline. So this is the safe trade that I given here, right? So we have the neckline. So we join the same support and resistance zones the very same way. Right? Market selling, you reach a key level, buy. Now when it buy, you get a pullback. Now the pullback is higher than the previous low. Right? As we say, we could easily identify that now. Right? Because the market now start to make higher highs. Right? So this high now higher than the previous high, but before the lows was lower than the previous low. Right? So you could see the market change. Right? When it get the bullish engulfing, the next pullback, it didn't come because it was going to continue selling. This will come and break this low here to continue the trend. But because it pulled back and it didn't take the trend, then we know the market shifting. But to get the perfect entry, we had to wait a little bit longer. So to get your trade, you go in and be sit down waiting. On if it's 30 minutes or 45 minutes, you're going and take it. Yeah, let's sit down and watch your trade. Right? This is something that we don't do normally. That we get licks now. We don't wait out for the things to happen and then enter. We just enter because we feel like we wouldn't get no more trade, but it always have our next trade. This not stopping. Right? This is a forever thing now. So when the market come, you're waiting for it to break the neckline. Now when I send an aggressive entry, I just send the trade somewhere here because I don't see this, I don't know the zone. I go in with faith. I close my eye and take any trade. If I'm wrong, I'm wrong. But I take any trade. Right? For you all, do not do that. Right? Wait for this to pull back and wait for it to break the neckline. So you see how it pull back, you get bullish engulfing and pull back, and then again next bullish engulfing. You see how this candle here break through here and you get a pull back and then holding, you can enter anywhere around here. And you put in your stop loss. Ideally, you pin it quite down here. Right? Ideally. This here is an aggressive stop loss. Right? I would still say for now, especially if you're on the prop firm, put your stop loss here because you could risk it now. Right? Because you could risk it. No problem. And this is your trade here. Right? So you're waiting for the market to sell, bullish engulfing, let it pull back, let it flop around, no problem. Each candle is 15 minutes, so you see how long you're waiting for your trade. And then when you get this next one now to break the neckline is your previous high now. Then you can look for the pullback, and on this pullback is where you're entering. So you could enter on any, so like this, anywhere in this candle here. You wait for this one to done. You see how this candle done here? Right? You see how you get this? And then you wait out this candle, and then you wait for this one to pull back. You see how this one close high? Right? You see this one close high? You could enter anywhere here. Now, a perfect trade would be that the next candle shoot off and go. Right? Perfect trade, you would not always get that. You will get candles like this that frightening you. Right? That's why you're not sitting down and you're watching that trade. I see this pullback. The market close above. I am entering the trade and I'm going about my business. What I does do is set an alert. So I go come now, let me say my stop loss below here. I go set an alert somewhere here. Let me say by this low. Right? I go per alert here. And so my alert could be check SL. And no, my stop loss not hitting now. But I was expecting the market to buy and the market still selling. So I don't like the market down here now. So what I would do is set the alert. So my stop loss here, I ain't get taken on the trade, but I will check it. Now if it's looking like I get real volume and big candles, and you get to see it now as we go, as I spend more time on the chart, there's only so much I could teach you. And you have things you just have to see and feel and experience for yourself. The more time you spend, you would know when the market looking to sell on you now, because you could be fighting to buy. And if you're looking like it's selling, I might close the trade early and take a L. If I turn around on my well, then alright. But it's looking like it's selling, right? We gaze them to sell. On this thing here, it just kind of show you when the market weakening again. It's starting to get a little lower. The market slowly pushing lower. You might get a doji on top here, like a morning star, and I'm kind of thing now. So you can see them there. I'm like, nah, but this market might take me out, but or it might fall my head and shoulders, you know. Nah, but I will get licks here. And then the next alert I would set. So let me say I enter here and I sell in a drawdown or whatever. I would add an alert on top here. And on top here, I'll out of time now, boy. So right, I'm alert on top here. So once your alert hit, I don't know. Yeah, no, we pushing, right? And we up the road. The next target go be here, another neckline, as you notice, is the exact same thing, right? And so we go. So for this one here, the target is, so it's the same thing, eh? If you notice, is the same cell, and you get the same V breakthrough, right? And this here is the same, is a bigger one, right? So this is a cleaner way to look at it too. Bullish engulfing, break our structure, wait for a pullback. Once I get the pullback, the market close, rejected home on top, I get enter here. This here is why you have to risk properly. So before I take the questions, if I have any, I just want to touch on this one here, right? Now, when the market push and you get the bullish engulfing, right? You're waiting for the other candle to close. Now, you see how this candle close here? This candle close here, kind of like I think this could be the evening star, right? This candle close here, kind of like a doji, so it has selling pressure now, right? So they will wait, wait until they see next candle come and wicked. Now, realistically, right, you want the market to come back in the zone. So within this box here is where you're looking for your trades now. Now, realistically, let me say I wait, I might enter the trade here, right? Realistically, because this is how trading is working now. Am I designed to eat your food, right? So men like to put perfect entry and make it seem like if it is, yeah, but it's snipers every time. That is not how that is worked though. You're going to hold your own, you're going to be panicking, right? You just have to be confident. So based on confirmations and experience, you could probably make calculated guesses as to what may happen. So when we get this, let me say end on top here. I still come and hold some drawdown here now, but because I risking properly, right, my stop loss might be here because I wait. Let me say I wait for the market to tap in. I got rejection here now, so this candle give me faith. Yeah, boy, dog, but that market wick hard, but I go and buy, boy, right? So I enter and it close at this candle right up here, right? And I go and put my stop loss below the next low. Right now you can put your stop loss on many middle here, it's fine all here. This one kind of subjective, right? I keep my risk proper, so I pay my stop loss here though. And if this might be a 200-300 or whatever, I cool with that. I going up to the next high though, right? No scene though. You could tighten up your stop loss. If you enter like in a 5 minutes and thing and you get a nice push, you could probably tighten up your stop loss, right? But you're going and hold all this show down regardless, It wick around, it play, it try to frighten you in that way, right? That is why you're not watching it, right? That's why you're not watching it. But let me say, you think eventually the market would take off and go in a direction, why? Because it magnetized to liquidity. It have to come back up here. For sure, the market had to come here and eat men who shorted. Right? Get that men who waiting the short on top now. So the market go had to eat or kill off men here now, right? So you get the move once the market break here. And that is basically the basis of the trading strategy that we're looking for over and over. I could look for these setups countless times now, right? So I know we went a little longer here tonight, right? But questions.
Stimmt. Right. Absorbent,
Me,
sponge.
I breaking up bread about it, well.
I say I get. I absorb what come in my way so far.
All right, nice. Anybody, any questions? Anybody else?
So Malo,
Mm-hmm.
basically the overall strategy is just marking zones on the daily,
Mm-hmm.
waiting for a break and retest,
Mm-hmm.
and entering on the 15.
Pretty much.
Alright, but
Pretty much.
alright.
And that's but you understand how you identifying the proper entry points,
Yeah,
right?
yeah.
So all it take is just practice identify them, and I pretty much just another over
Alright,
and
but
over, and on a rocket science.
yeah. No, because what I was going is the way how other people just put it across, you making it way more simple.
It is, bro.
Other people going and other people go and tell it, draw your zones on the daily, then go to the 4 and draw zones on the 4. You understand? So then people just begin mix up on which zones to actually, you understand?
Yeah. Uh,
Yeah.
Man, this make it seem like it's complicated, but anybody that trading relatively profitably, there'll always be simple things. So most people, I believe everybody on this call currently, have the potential to be. I might have the potential, and I'm talking about like learning from me and whatever. I mean like that. Or like probably already could trade. Most times when I come across people, they already have good basics. So anyway on YouTube, so you're all learning from me for whatever different reasons, or they decide to check me, right? But when you go on YouTube and thing, everybody information has been the same, right? Because all I we hear went through YouTube. All the
Yeah.
information has been the same, as we all know, and none of the information has been necessarily bad. It's good information, right? So almost all of us just pick the direction good for the most part, right? We all pick the direction good. The issues there's be the personal development that's necessary to do this consistently. So we never conquer with fears because we sit down watching the chart. We never conquer with greed, right? Because we over leveraging and we want to make all the money in one trade. We're not contented, and then we don't have no certain money and then the whole no drawdown. That is what this kill we. We're not patient to wait 45 minutes for your setup to play out. Because now tell you something, I might sit down and watch the market movement for 45 minutes, 30 minutes, an hour sometimes. Just to see what I'm looking for 1 hour show, right? So them little things is what does define, and make your trading profitably. So all these sort of fancy things I'm telling you about, not necessary. What necessary is your personal development to build your discipline, get control of your greed and your fear. And that's what I is now, boy. So the trading, the technical part, this thing here, everybody had that relatively easy. Not no rocket science. That is what you need to develop to be able to make money from trading. That is why I don't sit down and watch this thing when I enter a trade and all too. It is tie up now. One more thing I want to touch on. That's a little quick thing with the indicators. Because we reach the end of the trading thing, and I will give all the traders looking at for this week, and then we wrap it up, right? So, anybody have any more questions before I finish? Yeah, I go into that. I'll look at it. Alright, well, I assume all good. Right. So the RSI and the moving average is the last line, and if you want to call it defense, right? Or is the last thing to confirm whether or not your trade looking like the trade you should take. So how it is use the RSI, right, is as such. So what the RSI does identify is places that overbought and oversold. Meaning, if the market overbought, it have a little too much buyers in the market, so the market have to pull back to give more buyers a fair chance at purchasing whatever the thing is, right? So get my little chance to buy some gold now, but right, you can't buy all those. A free market for everybody, right? Don't buy all the Bitcoin, bro. Leave some for the rest of the arena. So that is how the RSI does work. So if the RSI high up here, now not because the RSI high, mean the market going and automatically sell, right? And that is where indicator based trading there's licks here. This is a lagging thing. Whatever happened here, going and then reflect here, right? But it's easier to see where the market may be based on that. So the RSI is kind of like support and resistance, like guardrails to where the market is and where the market would go and what we could probably anticipate. Right? The word is anticipate, never predict. I absolutely hate to hear people predicting where the market would go. You are going to be wrong. This is a very irrational thing. It is designed to take your money. You don't know. You're not so bright. Be reverent to what you're looking at here. You cannot extract any trades from this thing. This thing is give you opportunities. It's not the boss. Humble yourself. The market, let's do what it want. Right? Alright, boss man. When it is the market or the RSI is up here, right? So I put mine at the 80 level, right? But on when you now put it, so you don't have to change the settings. Right? It will be on the, I think it'll be like on the 70. Right? When the market high, that mini market, a little not too much volume onto the buy side, so it would correct. So the market does never go up in a straight line, nor does it go down. As you know, just keep going up and down, pull backs, push, pull back, push, right? It just push and cool off, push and cool off. So when the market high like this, like how we seen it green here, right? We could anticipate that the market may be looking for a reversal, right? As you notice, in all the trading range, as far back as we could go, the market stay inside the RSI. It will come out, right? If it does come out, it ain't going too far. It come back in. So the market is a guardrail, right? All trading activity happening between 80% and down here is all the 20%, right? That were all the happenings happening. So as you can see, this is consistently happening. So the market don't do nothing new. You wouldn't see nothing for the first time ever in the market now, right? Everything that going to happen, done happen already, right? So what we just look at is past data, right? Repetition. So what we're looking for is that we're just flexing our muscle, doing the same thing over and over. So because we know the market, basically, you can replicate it, we're going to use the same sign that they gave previously to do a particular thing, right? So when the market low down here, this will come like support, then you can anticipate a reversal. That's what we're looking for, right? So you can see it line up with a low point here, right? So the market oversold. That too much, the market going too far down, right? We don't want it to go so far down, we have to buy back some. So this is an indicator that we could possibly buy some or whatever we trading, right? So we trading gold, we buy in gold. We trading Bitcoin or whatever, we buy in Bitcoin or whatever, right? So this is an indicator to suggest that you may be getting a reversal. Same thing with the overbought areas. market a little high, we could anticipate that the market might get a little reversal, right? So that is just basically how the RSI does work. And the 200 moving average is one. It is so when you're pony moving average, whether it be the EMA or the SMA, is basically the same thing. You change it to the 200. So the last 200 candles from this point is where the trend is. So one, it does give you a trend that you could follow, and it does also give you, it is act as support and resistance. Do not use it as support and resistance. You can if you want, but I would recommend you don't. Right, but it does act as support and resistance as we see in here. Right, so it is a place that you could pay attention to. But support and resistance is also be consolidation like this now, so you don't want to get tired. How are you going to use this, right, to help in your trading? Is so the 200 moving average is not as necessary as the RSI. Right? If I had to pick one, I'll pick the RSI. What you're looking for is for a second this low here, you want this low point to line up with like here. Beautiful, boy. And look at the trade we identify. We that good, boy. Oh God, the market making me look like I know how to do it, boy. You see the RSI low here? This is oversold, and it line up perfectly with our trading position. This is the ideal place to take a trade. So when you see the RSI line up, like they will say it oversold, and also line up with a key level like this, execute your trade. You're going to more than likely get the trade you're looking for. It's our dotted line in the middle of the RSI here that come like a 50 line. So this is also support and resistance. So anything above this is buys, anything below this is sells. Right? It don't have a hold to that. Right? That's not because it's touching the line meaning going and do something. Right? But it's just a additional confluence. So this is the last thing you look at. So all we now look at to help identify the trade and the trend and all of that manually done. And after you do all of that, then you come, because I no notice this here. Then you come and to make sure the RSI line up with this trading point, I can execute my trade here. Right? So it'll just give you additional confluence as to say whether your trade going and play off, yes or no, whatever. Right? So use it last. But if you see it as a powerful sign or tool to help, determine if you're correct or not now. If you don't do all this and then this line up with you like how this now line up, you're real bad now, boy. Right? You're good to go. Right? So that is pretty much the trading strategy there. Now, right now, I still know fundamentally gold should push this week with a lot of happenings in the world, politicking, right? Because I changed the zone, I see we have a even bigger range right now. So I'm not happy about that. I would like this to be closer to on top here, to be quite honest. And based on how the markups was previously, we was closer to the all-time highs. Right? But right now, we're not looking like we as close to it, right? So this year, on the put on the 4, should line up. And should line up. So the trades are looking at this week here. And as I know, once I get it, I will send it. So another thing. But this will be the trade that I'm looking at first. It's not my ID trade. I don't like it. It's not the A1 setup now. It's just a thing to take. So if we take in this, we take in this trade real small. They just source now, and this is just for trading sake essentially. And so we could be inside this range here. So the trade that we'll be looking for is pretty much a break above the zone and a break below the zone here. And I was sending markup and thing, and but we will take it here. But I'll tell you how to trade it though to get the best results. And you'll take it here. And nice. So we set our alerts above and below. So this is the range we consolidating in here. So what we're looking for is for the market to either break above the zone, and we'll take it here because this is all-time highs. Right? So once it's break here, it's gone. But this go take real plenty to break the zone now. Right? So chances side might chop around here. This could chop around here for days, weeks, months. This could chop around here for years, dog. Right? And we could trade within this range for a long period of time. Fundamentally, that not looking like it would happen. However, it very well could now. We don't know. And same thing for below, the market could shoot down and it could break below, bearish engulfing, retest, and then we could take it. I will take it on top of this line here. So that we're waiting on. So if this trade does play off, I will take it very, very, very small. Reason being, we don't have a big range to go to. Right? We're gonna hit. There's gonna be a resistance. We hit a 19 pip trade, which is excellent. Though is a good trade. 19 pips not bad. Right? It's respectable. And if it break below the next target, could be down here to 31 pips. Once again, respectable trade now. Right? So now it's not the worst trading ranges. However, I'm looking for the big move. Right? So I'm looking for it to break these major zones. Chances that it wouldn't break below here. More than likely, it would break above now, based on the geopolitics that go on in the world. So I'll move down this alert. To be quite honest, I'll put this alert here, which is 29.32, and then I'll put this alert here, which is 28.88. Alright, so we're inside this little zone here. What we're looking for is for the market to break through the zone, hold bullish engulfing, retest, hold above anywhere above this little zone here. So you can even come out them. I want to keep on top here, and then we enter and then we gotta buy up to this 29.50 area. If the market sell, you can short it. It will break below the zone, bearish engulfing, retest, hold the trade, come down. I particularly do short, alright, but if I do decide to short it, it could be for small money. If I do decide to buy it, it may be for big money. If it when they break above these highs here, all time high, if it break above this low trading range here, I would throw money on these trades because once they break these major zones, they go run now. Right? So that the trade we're looking at right now, all we have is consolidation. So gold does consolidate for long, so that's why we're looking into trading oil and thing. I might get some better setups there and whatnot. Right? So that is it there for tonight. We get extra half an hour. If we have any questions again, feel free to ask.
Very so we can trade BTC or
So you could trade anything in water. I
no
me yeah, but it's you
you.
give me that big trade. So now that we can't trade BTC, you could trade BTC. I just like what I like. So the reason that this shit go, you might understand how that is trade. So
Yeah, no, I know,
yeah,
but you know it is see it like I hope and BTC do you the
yeah,
see it like I hope.
is so me know what we're now with Bitcoin, bro. So to be quite honest, right, I think I was telling you this with Bitcoin. I really and truly wouldn't trade Bitcoin. I see now, that man getting chopped up in Bitcoin, though. Here why? Once again, man, free high time frame, dog. Right, but when I zoom out to like that weekly, bro. Watch what going on here. Bitcoin going and test this, dog. Nobody see, I know, bro. And man, not seeing this, bro.
Exactly, and
Everywhere
that's why I
stop, you
say
know.
even though what happened with me and you on this, right?
Mm-hmm.
You went on a higher time frame to see what went on go on. So you know what to look for regardless because you see the moves, you know how to find the move she so see where you could find on this and give me something.
All right, so I'm gonna tell you, bro. This one really easy to trade, and I don't know why men taking that chop, dog. Bro, Bitcoin coming to test back this area here, though. Right? I don't know what figure is this here. Right, but whatever. So this is what I don't know what price I is. I don't have it set like that, but whatever price it is, this might be like 70 something or 60 something thousand. Bitcoin coming to test it. If you look on the RSI, it below the 50 line, it going and sell off until it reach the oversold area, right? When Bitcoin reach down here, this is when you're going to buy Bitcoin another and hold on monster trader. Bro, is a pullback. This is a double top here. The market buy. So yeah, for me, you had a short, but I would tell you though. We get all time highs here. The market pull back and then it come back and it tests back all time highs. This created a double top. How I bro? This created a double top dog. Right? It's also for my head and shoulder. Two relatively equal highs and then we get a big sell off. What you feel gonna happen here, boy? What is big bearish engulfing? The market going on test liquidity, we know what, right? So it going and come down here and test back this area, whatever price this area is. Only when it come down here and we get the chant pattern that we now look at, right? And if you see the sign of reversal, then we go buy some Bitcoins. Throw your money at it. So throw your money on a trade, throw your money in spot trading, and they get a good price to hold Bitcoin away. So that is how it is we go and trade it. So if you come down here, right, I know see them mention some buys and thing on Bitcoin. It's crazy, bro. They could trade in below the 200 moving average and all that. Right? You could probably short them though. Right, but I don't like this area here. The reason why I don't like this area and all too is because the market could test right here now. Right? It's going to give you a reaction. We don't know how big of a reaction it would give, but it is going to give a reaction here. Right? So right now, you ain't had nothing now. Right? It's going right there. This done to the right. So we done seeing that and if you could see how it turned red here already, so that doesn't mean it kind of oversold. So it will buy a little bit, right? So you'll get reaction. Now ultimately, I think it coming down here now, boy. Right? So the trade on Bitcoin, our market's up though. But see here, what I don't like Bitcoin too. This move so wild, boy. Though, boy. Crypto's real. Cryptos are real different.
You just need to take a lower lot size.
Yeah, I guess it could. Yeah, it could do like that.
Let's see
So
how we get from.
yeah, so I'll put the alerts, no scene. So ultimately, we want to short Bitcoin to reach into this area here and look for the chart pattern. And the chart pattern is this thing here. This is the same trade you and I took. And you see how before it sell off, remember I call the resistance level and I come off of the 200, right? So we're looking for this same thing here, we trading thing here. We're looking for this to happen either here or ideally here now. And so could like if we get pulled back on it, they get shorted till here now. So ultimately, um, I'd wait till it reach down here to this area. Whatever prices, I don't know if I look at 1.55. I don't know what actual price is, but I must see if I could find a different thing. The prices here, boy. Nice. You tell them you don't like Bitcoin and what you know. You don't know trade on Bitcoin or you like Bitcoin, dog.
Well, yes, you are looking into it. So,
Alright, alright. So let me see if we find thing here. Right. So what we're looking for is this to happen at this level here. Right. So for right now, it's a little too close to enter any trades. Right. It don't have a big enough trading range now. Right. It could remember it's a zone, an area. So the market can reject from anywhere here. Let me just say this candle from small, so then it is going to turn around and buy on here now. So you can't really take no trade here. Look at we don't get too doji. So we ideally looking like we could be reversing from here now. Right? So we're only 15 minutes. So essentially what we want is for the market to break this zone here. This could be the neckline and break below here. So if I break below here and I continue down, we will just bring down the trading range now. Right, so this could be like a pullback and then it could push down more and then we will look for it to break the next high. Or if the market break this area here and continue going up and retest. So I will set an alert here. So we see if I get a Bitcoin trade for that we said though. Right, nice. Then we enter the SL. Let me see what them fellas enter though. That's my TP2, TP2 trade. I know what they do with Bitcoin, huh? Oh, they sell Bitcoin, you see? And sell Bitcoin. Right. Oh, they never use it.
So they take a salary.
Yeah, them sell it. I know what area they sell from. But be there's plenty time when I look at what I'm doing and what I doing, there's real small thing. And plenty time things that I miss them get chopped up in and all too. So they go get not because you're trading plenty, yeah, you're selling real signals, mean you're selling them real bad, you know, dog. It's kind of quality now, boy. Right. So what we're looking at is for the market to break back above here, right? If it does break, I would send the thing, but we know what we're looking for. Right? We just have to be patient with it now. Arrow. So we're looking for this for buys, and we're looking for it to break this neckline here, but our bullish engulfing, retest it, and then hold. Once it hold, we could enter. Or which is looking like it might do because we're getting some, and then I'm looking for the same thing below here, which as I really and truly anticipating, and to tap into here, and then we look for the same chart pattern lower down, and then we can take it to the next high, and then that will just be retraded because we don't know what to do in now, right? And fundamentally, I don't understand what happening with Bitcoin currently, and I know it should be on the rise, right? It should be on the rise because of what Trump and things say, but it's clearly selling now, right? And if I was a guess, I would just assume it's selling because it want to test the liquidity zone. Right? It have to come to liquidity. Right? Have to. It must test back the zone. Now, once again, trading is a zone and not necessarily actual thing. So it could all here could be it now. Right?
Well, from what I see, from what I see, the news I come out is that you want to create a new Bitcoin zoo, right? So I guess that will be more Bitcoin
I,
to be purchased. So I don't know if people selling all whatever Bitcoin they have, but when that come into play, they're gonna buy what
yeah, buy
he
from better
is
price. Yeah.
laying about.
Yeah.
So I think from my understanding, I think that's what I just trying to,
Yeah.
think that way now.
Yeah. So we kind of on the zone here, right, for the most part. Cause you see, we got a big rejection, It come, we got a big wick, right, and then we come and we get the sell here. Now notice this is on the weekly. Now we don't know where this candle going and go, but if this candle close doji, like we assume it does, right, you're gonna get a big buy, because this could be a chart pattern here. This could be what your morning star. So you get a big candle coming down, you get doji meaning reversal on a key level, and then the next one goes shoot. So this could really and truly, to be quite honest, a very good opportunity to buy Bitcoin. See, we still getting these dojis here. Now this is a daily, so we don't know exactly what happening. However, it looking nice. So all on the 4 hours and thing and whatever, we're on the key level here right now, and this could be like a double bottom. So the market could really and truly give you a nice buy from here. To be quite honest, it's shaping up as such. So if we get this move here, we should get a nice buy. Multiple entries. First entry will be on top here. That will be the first target. I just put my targets a little bit lower on the top, just in case now. Alright, so this will be TP1. Alright, and then if we enter next one, you can just leave. Is that a TP2 will be on top here, or if you want to leave it just open to see what happened though, and get a forever trade. Back then, well, no, they wouldn't know because they wasn't in the group. But I get a gold trade. I get a whole lot trade for a real long dog. I just enter it and never close the trade until like a good while later, dog. I never achieve that again. Hopefully I could get that sometime in the future. A good couple days or maybe like a good week plus. I just hold on to that one trade. So this could be retraded, right? So I had the alert set. Once I get what I'm looking for, I will send the trade in the group, and we could take it. Or they could also come and mark up all the zones and see if they have anything now. Right? So we might get a Bitcoin trade courtesy. Shuva. Alright. So anything else? Anybody anything? Oh, they good. Something like they good. I hope the session was informative. And
Yeah, we're good.
we were on the way to making this bank here. Or look into the prop firm, I highly recommend it. To start to make some cream. Alright, so I think we go take it to your team. I will see you in the group. Huh?
All right. Thank you.
Alright, later.
Later.
Yeah, Malo.
Don't know whether.
Yeah, man, thanks for everything.
Don't know, Brewski.